Hey, Matt Skinner here. I'm glad you decided to jumpstart your investment portfolio, and I'm about to show you how. But first, a little bit about me and my company. I'm going to give you a quick overview of the company and tell you a little bit about myself and how and why 12 Stone was founded. Then we'll jump right in and talk about making money. Sound good? 12 Stone was founded for the purpose of buying cash flowing apartment buildings and cash flowing self storage units. Our team of expert acquisition specialists comb our target markets for the best deals. We mostly go after off-market properties. We look for good buildings in great areas that have distressed sellers. Now let me show you how you can benefit. When we have a great deal under contract, we look to our investor partners who like to earn a great return on investment. We do all the work, the deal hunting, the offers, marketing, management, everything. We pay our investors a higher rate of return than they can typically find elsewhere. My goal is to buy cash flowing properties with individual investors so that we can achieve the same buying power that are usually only reserved for large institutions. I know that you'll be interested in seeing some of our deals, but before I can show you any specific offerings, you'll need to return an investor interest form. You can click on the link and begin filling it in. A little bit about myself. I started in construction working for my father way before they had child labor laws. And when I got old enough, I followed in his footsteps as a builder and a general contractor. I was buying junker houses, fixing them and selling them for an enormous profit, and having a lot of fun. I was fortunate enough to open my doors. I specialized, and it was even featured on the cover of a well-known architectural magazine. Also on the cover of this book, Dream Homes Los Angeles. I've also developed commercial real estate like this 7-acre site you see here. And then I turned the company towards condominium and multifamily development. And as I'd like to say, I was one of the lucky ones who lived to tell about it. I recently wrote 2 books on short selling, but mostly I'm a family man. I've got a beautiful wife, Christina, a 2-year-old daughter, Charlotte, and my 1-year-old son, William Henry Skinner, named after his great-grandfather. When I'm not spending time with my family, I'm looking for strong, cash-flowing properties. There's a tremendous opportunity right now, and the timing is exactly right to be buying real estate. 12 Stone is set up to locate, negotiate, purchase, and acquire. And we're always looking for new partners to get involved in our deals. We buy for cash flow in good areas. The National Association of Home Builders recently reported that there will soon be an apartment housing shortage because nothing new is being built, and very few starts are even being planned. This creates a huge opportunity for us in the as apartment owners. The way we buy them, apartment buildings provide us a higher rate of return, a steady income stream, a hedge against inflation, and tremendous tax advantages. The reasons apartments will soon be in such high demand are because the foreclosure phenomenon are driving more people into less expensive housing solutions. At the same time, we've just begun having our largest generation of Americans turning age 24. 72 million Americans will reach the move out and get an apartment age in the next several years, and I'm going to be happy to help them. We also like self-storage facilities, but shh, we don't want too many people knowing our little secret. Self-storage is just like owning apartments, except there are no tenants. We're actively locating self-storage facilities, especially in the height of the foreclosure markets. The overall picture is this. U.S. real estate is on clearance sale. Our currency is intentionally being devalued in an all-time low, and there are many, many distressed sellers of good properties out there. If I lost my mind. All markets boom and bust. It's happened since the beginning of time. We 2007, and I believe that most overlooked is that some areas around the country will recover. We like LA, especially certain micro markets in and around the city. LA is third in major city job growth. We have a high migration pattern from all parts of the world. Everyone knows about the entertainment business here, but LA also has one of the busiest ports in the world, and even a fashion industry. Frankly, most people just want to live here. It's probably the weather. We also like Phoenix, Arizona. When you can buy cash flowing assets at far below replacement value, you've got to have a good thing. Plus, we believe Phoenix will continue to expand its population as more and more businesses take advantage of the business-friendly climate that Arizona provides. And then there's good old Texas. I love Texas. Texas, I think, is one of the last great hopes for our country. Texas, and specifically Austin, has a tremendous business climate for growth, and we love buying cash-flowing assets in areas primed for growth. In general, we have the perfect storm: low prices, motivated sellers, low interest rates, and an exploding demand for multifamily housing. So what do we get ourselves into? We like buildings that are 50 units or more. We like B and C class assets. We always try to buy in the path of progress, and we look for good opportunities in a great area primed for a better upside. Most of the buildings we look at have some kind of value add component. The first step in this process is to identify the properties that qualify. Then we sift through and find the right sellers. Once we're talking about the right property with the right seller, we can then work on the right terms. For our portfolio, we're buying deals that meet our conservative criteria. We like properties that have an 18% annualized return or better. We like properties that return in the first year at least a 10% return. Properties we're looking at have some kind of value add component. These assets. Here's a sample deal. This is a 32 unit building. Purchase price is just $2.5 million. That's $78,000 per door. In most markets in the country, gross scheduled rent of $397,748 in income, with an NOI of $230,000. The purchase price. This property was purchased at a 9.2 cap with a 12% cash-on-cash return in the first year. This next deal I'm going to show you is 173 units. Purchase price is $4.5 million. That's $26,000 per door, way below replacement value in any market, even in Phoenix, which is where this one is. Gross scheduled rents for this property is $1.2 million. We put together a down payment of $1.6 million with our partners, and we took over existing financing at a very low interest rate of 5.5%. This is 11.5 cap, 13% cash-on-cash return in the first year, with a projected annualized return over 5 years at 114%, month in, month out. Show me one of your CD or stock accounts that has that kind of cash dividend. When we catch our fish, we invite one or more investment partners to join with us in the purchase of the building. We put together a new limited liability company and issue shares to our investor partners. Because of our acquisition strategy, our partners receive immediate cash flow, a pro rata equity share in the property, participation in the appreciation and the tax advantages. We locate the property and we do all the due diligence. We package the property for your review, and then you decide if it's a good fit. We collect the funds and close escrow. You get a quarterly cash distribution and a quarterly report. You get a K-1 each year with all of your tax benefits, and you get a pro rata share of the profits when we sell. By now, you're obviously interested in seeing some of the deals we have available. Make sure you download and fill in the investor interest form and get it back to me as soon as particulars of each new opportunity that becomes available. Again, thanks for joining me here. If you're looking for a more secure method for asset preservation, a higher rate of return than typically found elsewhere, and huge growth opportunity, then you found the right team, and I look forward to securing our financial future together.